Hey everyone, it's Desmond Samuel here, and if you're looking for the best trading setups weekly and the best trading tips and the best market insights and the best trading strategies, you're in the right place. You're literally at the right place. So go ahead and hit the subscribe button and then turn on the bell icon so you do not miss out. All right. Now, the first pair on my list now is the euro dollar. You guys have been with me for a while. For those of you guys who are actually subscribed and watching my videos, you've seen that I've actually called out the euro to the upside for quite some time now. I've been long, shorting the dollar versus the euro, going long on the euro versus the dollar for quite some time now, and we have made a staggering amount of money so far. Now, this is where things stand as far as the euro dollar is concerned. Now, we are actually at a very, very, very solid level. We happens to be a supply level at right about this yellow bar right here. All right, so I'm sure that if you go ahead and look on your chart on the weekly time frame, you're going to spot this level as well. This has been solid for years, all right? So this has reacted here for about 3 years, about 2 years now, right? So this was in the year 2022, the market reversed from here and then reversed from here as well. So this is quite solid, all right? So now as things stand here, what we need to be looking for is a pullback. Now, it is a bit of a 50-50 trying to go long on the euro from this point here, because you're literally buying into supply levels, which is actually something a bit tricky. However, here's how we are going to be doing it here. So now, before we actually think about going long on this pair, let's kind of look at where we stand in a bigger view. All right, so this is how things look on a bigger time frame perspective. We're talking the weekly time frame, but let's talk the monthly. Let's see how things look there. So this is how the monthly time frame looks here. We have not been able to take out the monthly high of the euro dollar. Instead, we're actually kind of like dancing around. So we are still in a range per se. And scaling down to the weekly time frame here, these are how things look. On the weekly time frame, we are actually still, dancing around this supply level here, and it is quite tricky because market could actually melt all the way back down. However, as things stand, I do not see that happening. I'm just not very, very confident in that happening at the moment. Instead, we could actually see like one more leg to the upside before we actually decide from there. All right. So the point I'm going to be watching out for is around this level right here. This is a solid demand level to watch out for. All right. So this is where I'm going to be watching closely to see how the pair reacts around this level on its way down. Once I see a decent weakening, as you can see here, this is a weakening. This consolidation here is a sign of possible reversal. Okay, possible mid-term reversal, medium-term reversal. That is, this could actually melt down to this demand level before actually decide are we going to blow ahead that is through this yellow bar here, or are we just going to stall around here and possibly break back down below? So let's see how it goes. All right. So now these are the conferences I have so far. We have an uptrend. So this is a high. This is a low. This is a high. Sorry. This is a higher low, some form of equal high, higher low, higher high, higher low here. All right. So the market has to come back and test this demand level properly before I actually look to go long on this pair. So we have from swing low to swing high here, which makes everything look kind of like decent, kind of like solid. Long story short here on the 4 hour time frame, this is exactly what I'm waiting for. All right. So this is how the trade is gonna look like. So for those of you guys who are actually watching, I always urge you guys to go back and come back and always watch these videos over and over again. See, you kind of like grab the concept of how I go about from breaking down the chart to actually deciding my trade entry. All right, so from here now you can see that this is where this trend started from. So I'm just gonna go ahead and plot an extra trend line from here, connecting the dots to this. All right, so we have two trend lines to open now. We have the inner trend line and then the outer trend line. So now I'm banking on the inner trend line because this is a lot closer to the price action. This is way too far. This is for the weekly time frame, right? So this is the one which is closest to the current price action as at hand. All right, that is why I'm going to be working with you. So what I need to see on this pair is very simple. All right, so we need to see a 4 hour candle, bounce off of here. After the pullback, we need to see the market the candle bounce off of here, balance out properly, then bounce out of here. Then we start looking for possible longs to back to this yellow bar right here, and then potentially if the market does have enough volume, enough volume to actually blow through this bar, enough volatility to blow through this bar convincingly, Then I'll be back here, guys. Once again, that's why I urge you guys to put on the bell notification so that you guys can be alerted once I drop a video. All right. So once we clear this bar here, is pace all the way through to the blue bar. However, we actually have to dig this bar. We have to conquer this bar. So that is where the market stands at the moment. Is a bit of a 50-50 because we could actually form a double top here and melt back down below. However, I kid you not, the market will most definitely come into the yellow bar here and stall a bit and then give us one more leg to the upside before we actually decide what's going to happen next for the euro. So the next pair now on the list is the pound sterling. So the pound sterling seems like it's a bit more decisive. All right. So for the pound sterling, yes. So these are how things look. We have an uptrend, obviously, and an uptrend to work with. So let's go all the way to the weekly time frame and see how things look on a broader picture. All right. So this is how things look here. We are still around these supply levels. Same thing with the euro. We are still around these supply levels here. We're still dancing around here. However, this market has been pretty decisive in the sense that it has given us a clear trend, which in this case happens to be a low. This is a high, higher low, higher equal high, higher low, higher high. All right. So this is where the market needs to pull back into for us to actually decide if we're gonna continue lower or blow this guy through the roof. Long story short here, I'm actually on the bullish side of things because this is the trend at hand. The trend at hand is actually bullish at the moment. So I have no other business as far as we remain above this yellow bar and then this black trend line here. I see no reason as to why I should start looking for a certain trend. I'll only be interested in sales if I do see us break below this yellow bar here and then this trend, and then that of course is shifting, is a shifting direction midterm. However, as things stand here, I'm very confident that we could even potentially rally into this blue bar right around here. All right. So now what we also need to watch out for is very simple. As you can see, I have my trend lines here set up nicely. So what I need to see is for us to pull back into the demand level that was created right around here. So, and please, as I call these levels out, please go ahead to mark them out on your charts. Or you can always, in fact, it pays you better to come back and watch the video. All right. So always come back to watch the videos, guys. It will really educate you guys. All right. So because sometimes I happen to leave a lot of paid material tips on here. So like I said earlier, this is the demand level that I'm watching closely because this is what I'm working with. All right. So you can see it sits pretty nicely with my Fibonacci. You guys know me by now. I love Fibonacci. And by the way, if you want to learn how to use all of these technical tools, shoot me a DM or go ahead and come to my Telegram community or shoot me an email. I'll definitely respond. All right. So next pair now on my list. So what you need to look out for the pound sterling is very simple. Yeah. Once the pullback happens on daily time frame, go down to your 4-hour time frame. Just go down to your 4-hour time frame and look for decent tight entries. All right. So look for the tightest of all the tightest stop losses. However, do so according to structure. So once this is set here, once there's a nice balance on this yellow bar right here, look for a bounce. All right. That's if the market does not wave like this. You cannot look for a bounce. However, if you wave like this, counter trend line can work. All right. So what we need to do is, and by the way, if you're new to the concept of counter trend line, go ahead and watch my previous videos. All right. So we need to see this guy deep into this yellow bar right here. Once it dips, then we cannot decide if we're actually ready to blow this guy through the roof, and that will be based on the kind of candles formed at the dip at this bottom right here. Okay. So next pair on my list would be the pound card. So the pound card also has a similar setup to the pound dollar. Yeah. So what we are currently seeing here is just a breakout and a potential retest about to happen on this pair. All right. So now we've been in this range now for a while, and if you measure from here to here, is about 400 pips plus. So period that this is where we're coming to once this retest is confirmed. So what we need to do is wait for this pullback to happen right around this yellow bar right here. Once that happens, we have space to the upside. All right. So guys, easy peasy. Always wait for the pullback on the bigger time frame, like the daily time frame. When that happens, you cannot scale down to your 4-hour time frame. Even your 1-hour time frame works. 15 minutes time frame works. The key thing is that all I want you guys to do is trade in the direction of the trend. That's all. All right. So entries are made on the 1 hour, 15 minutes, or even 4-hour time frame held according to structure, and then TP1 is here. All right. So the next pair on my list is the USD card. So for USD card, it kind of like reacted sooner than I expected. because I wasn't really entirely sure that the market was going to react to this minor supply level that was present here. Later did I know that the market had even broken out of the range. All right. So, like I said, these things require you to watch it closely, watch them closely. However, I'm still adamant that the USD card is going to come up all the way to this yellow bar right here and satisfy and fulfill this technical criteria, which I've had here for a while. So I need to see USD card pull in deeper into this yellow bar here before I actually collapse this guy all the way back down. So prime target, obviously, after TP is cleared, because this is going to be our next TP. So once this TP is cleared, we have space all the way to this blue bar right here, which is around somewhere here. All right. So please note the levels I'm calling out. So the next pair now on my list would be, let's see which one is behaving nice. AUDUSD so far so good at bullish. All right. It is giving some bullish moves. So what we need to do is, obviously, like I said, every market on its way up creates a demand level, on its way down creates a supply level. All right. So now what we have on our hands is a demand level, because it's happening at the bottom and then it took out the highs here. So this is a clear case of when the demand is greater than the supply, the market rallies. All right. That is so let's use the Nigerian petrol situation now, for instance. Now you can see that currently in Nigeria there is a fuel crisis going on. So you can see that the scarcity of fuel, and the unmet incredible demands of fuel is causing the price to just skyrocket. All right, so that is exactly what's happening here. So we have a solid demand here that has outweighed the supply level, and what's going to happen? The market will always rally. So what we need to look out for now is for this guy to pull back into this yellow bar right here. Once this pair pulls back into this yellow bar here, right here, my prime target remains 0.7. Okay, that is where we are headed to as far as the Aussie dollar is concerned. All things being equal, we are headed to 0.7 region. All right, so that is just what I thought I should let you guys know on this particular episode. The next pair now is NZD USD. So NZD USD also, on the other hand, has a decent opportunity to give us some pips. As you can see, it has smashed our TP. So I called out this pair sometime back, a couple of episodes ago, and then I was like, you guys have to start buying this pair because we're actually going through the roof all the way to here, and we've just done that. However, on our way up, we didn't only smash TP, we cleared trend line, the downward trend line on weekly time frame. We even gave a triple bottom, and then even on the way up to ETP, we created a demand level. So this is solid. I don't know about you, but for me, I'm watching NZD USD closely because I'm going to go long on this pair once I see a rebound. And I see the market pull back into this yellow bar right here, which will be a very decent confluence. As you can see, I have my swing low to swing high right here. Everything sitting pretty nice. So what I need to see is market to pull back into this yellow bar right here. And I'll definitely take this buy trade, guys. This is decent. All right, so next pair on my list would be gold. Sorry about that, guys. So gold on the other hand has been very linear in the sense that it has just been making new highs. It's almost as if every new week comes with a new high for gold, man. So, however, if you've missed this entire move here, don't worry about it. Relax. Have you subscribed to the channel? Go ahead and do so. Turn on the bell icon and relax. Desmond is here. Once again, Desmond is here. I said Desmond is here. You get me? So now for gold so far here, we have actually gone ahead to create fresh demand levels here, right around $2,500 per ounce. So if I were you, let me advise you. So what you need to be looking out for is a pullback into $2,500 per ounce for gold. And then once this is confirmed, tested and trusted there, we'll definitely rally to $3,000 per coin, per barrel, per ounce for gold, guys. Sorry, I've been analyzing some cryptocurrency and oil. So yeah, so once this level is validated and tested properly and trusted, we have space all the way to $3,000 per ounce for gold. Now, all things being equal, if this level holds, this yellow bar holds, and then this trend line holds, I see no reason as to why we shouldn't even rally into 3K. It is very possible, considering the fact that the US Fed just cut the interest rate by a whooping 50 basis points, guys. That's huge. All right, so this is sending all of these pairs sky high. Now we need these levels to be validated, otherwise this could end up being a fake out. All right, so we need this pair to come back and test this $2,500 per ounce for gold properly and balance out. You see the way it did here. when it created the demand level here, it balanced out properly. So we need to see some consolidation here, cluster of candlesticks, and a nice bounce on a 4-hour time frame. That would be very decent for entry. All right, so I kid you not here, gold is one of the sweetest pairs to trade if you catch it right. If you catch it right, it can pay you, reward you handsomely. All right. So obviously once this pullback is confirmed, the first level target will always be the recent high, which is somewhere around $2,600 dollars per ounce. And once we clear this bar here, we have space all the way to $3,000 per ounce for gold. The next pair now on my list will be silver. So silver also has a similar situation according to gold, or rather in comparison to gold. And like I said earlier, the market always on its way up will give you a signs, will give you clues here and there, little clues here and there. We call them like bus stations, we call them like commercial bus, stations, train stations. All of these things are just the funny names we give these pairs, these price action events. However, in this case here, professionally, it is called demand level. Why? Because the market is headed higher, and on its way higher, it leaves certain clues that, okay, fine, potentially in the future, I might come back here to test this level. So mark this level. In case I come around and then you're wondering where to enter from, you can enter from this level. Why? Because I left a clue on my way up in recent times. That is exactly what the market has done so far here by creating so many demand levels for us. And demand and supply is so like, it is a game changer once you understand what you're doing, which is why I urge you guys to grab the course, come shoot me an email, come to my Telegram community, meet like-minded traders like you guys. We have crypto traders, we have futures traders, we have stock traders, we have all the traders, guys. We have the day traders, we have the swing traders, position traders, investors, we have them all over. We have scalpers. All right, so you are always welcome. It is multi-dimensional. You're always welcome. So what we need now for silver, and you guys have been with me so far, we have called silver out right from 24 or 26 dollars per ounce for silver. Now I'm calling out silver again. When it comes to $30 per ounce, we have to blow through all the way to 35. Obviously, once this pullback is confirmed here and it's tested and trusted here, actually, let me see if we have some trainers to play with, because I like to, I'm not really a big fan of leaving stones unturned. I'm not in a haste to trade. If you've known me for a while now, you should understand I'm one of the most conservative and patient traders ever in the history of traders. Yeah. So on 4-hour time frame here, we do have some decent. However, this trend line is way too wide away from price action. Okay, it's too wide just too wide, bro. Just way too wide from price action. So we can't work with that. However, so now we have to rely on a demand level play. All right. So we have a Fibonacci here, which happens to be from swing low to swing high, right about here. And then the market has to come into deep demand levels around here. So once this is tested again and confirmed, we have space to the upside. All right. It's easy peasy. First level target will always be recent high, which happens to be $33 per ounce. And once this is cleared like so, we have space to $35 per ounce, which has always been a prime target right from the time if you've followed me for a while now. So next pair on my list now is the S&P 500. Now the S&P 500 has been on a bullish run for years. Like, this pair is always bullish. Rarely do you ever see this pair bearish. If it ever gets bearish, it is just a pullback to continue bullish. That is how bullish this guy is. It's crazy. All right. So and that happens to be like the natural sentiment around stocks. All right. So now, long story short here, in order not to blab about S&P 500, now what we need to do, because we've actually blown out of this range here. So we were in this range for about 486 pips. So now we're finally out of the range here. So the market has to even rally into this number of pips here before we actually have some form of consolidation or even start to anticipate pullbacks. So what we need to look out for S&P 500 is very simple. Allow this market rally for some more time. Yeah, let the market rally some more time, and then let it pull back into this yellow bar. So we have space all the way to this 6,400 basis point, which has been my prime target right from the time I started calling out S&P 500. And I'm saying this here again so that everybody sees this. Bloomberg, Yahoo Finance, you guys are hearing me first. If S&P 500 continues on its bullish trajectory, we have no other choice but to run into 6,400 basis points for the S&P 500. Is really a no-brainer. All right. So so what you need to look out for is something very simple, something like this. We have this, and then a decent pullback like so, textbook entry, and then Viola. See, looks easy. Don't worry. So yeah, next pair now should be NASDAQ. Let me see if NASDAQ has anything worthwhile that we can work with. NASDAQ. Let's see what NASDAQ has. So NASDAQ on the other hand also has been on a bullish trajectory. Okay, so for NASDAQ here, we are yet to blow into our 20,000 basis points. All right, so I'm still very eager to smash through. However, at the meantime here, we have a demand level to work with here, and in this case, it happens to be around 19,000 thereabout, if I'm not mistaken, 19,400 basis points for the NASDAQ. So what we need to see is market to pull back into this level here, balance out properly before we actually come ahead and then blow things through the roof all the way to 20,800 basis points for NASDAQ. Now, all things being equal, this should happen. However, it should, in case the market choose to do anything different, we are definitely coming back down to this level at 18,400 basis points for the NASDAQ. The next pair on my list now we have is should be US30. So US30 also has like a cleaner structure compared to NASDAQ. NASDAQ is a bit in between. As for US30, it's a bit more concise, a bit decent. Okay, a bit decent. So for US30, which happens to be the Dow Jones Index here. So we have, like I said, a trajectory is upwards. All right, bullish run, bullish momentum, bullish trend across S&P 500, across US30, across NASDAQ. So what we have to do now is wait for this pair to pull back into this created demand level. The market created this pair created a demand level around here. So the market has to pull back and validate that demand level that it has created before actually come and hop on a trade around this zone right here and then blow things through the roof all the way to, obviously, recent high has to be the first level target will be 42,000 basis points. That's 42,630. And subsequently, once this level is breached, we have space all the way to 45,000 basis points for the US30. All right, so the next pair on my list now is Bitcoin. So Bitcoin, on the other hand, has been somewhat of a very indecisive pair, very slow, very indecisive, pissing me off, to be honest. But yeah, so for BTC so far, I think I'm gonna leave BTC for now because it isn't really enticing, to be honest. However, if anything happens, I'm actually waiting because now the trend is shifting upwards. All right, the trend is shifting upwards now. From we initially went from making a lower high from here to making a higher low from here, and then obviously coming in and to take out this high. So what I need to see on BTC, all things being equal, is a dip back down to $58,000 per coin. Once I see this dip, I'll definitely go long on BTC. First level target will be 66K, and subsequently should rally into $72,000 per coin for BTC. That is what I've said so far. And if you continue like this, we have no other option but to blow through all the way to $72,000 per coin for BTC. Other ways we are bullish. USD CHF on the other hand here has been very sideways so far. I wonder how you guys have been trading this pair, because left to me, I cannot deal with this. All right, I'm very picky when it comes to the pairs I trade. I could call out like 17 pairs and trade maybe at the end of the day just 2. All right, so now for USD CHF here, what we have here on our hands is a downtrend, no doubt. Once again, you can go back and view my previous videos, which I'll leave the link here somewhere around here for you guys to always go back and check out if it doubts me. So now what we have on our hands is a demand level that has not been tested or validated. So what we need to see is for this guy to pull back into this level right here. Okay, pull back here because we have lots of liquidity stock around here. So the market has to sweep that. So once the market does all that, it comes into this yellow bar here, right? This yellow bar right here. We have space all the way to the downside right around here. Okay, so I'm super bearish on this pair, USD CHF and USD cash. Super bearish on them. All right, so but first things first, we need to see the market pull back into this yellow bar right here, right around this point. Once this is all said and done, we have space all the way to the downside. Provided that this level holds, we have space to the downside. The next pair now on my list would be EURUJPY. So I called out this pair to the downside in my last weekly Forex forecast. Kudos to you guys that took it serious. And then I said to you guys that once the market has created a demand level, as you have seen, like so, this in this case is a flip side, it is a reverse now, which happens to be a supply level. Once the market creates a supply level on its way down, the market 9 times out of 10 times will always come back to test and retest that supply level to make sure that it is valid before continuing downwards. In this case, because it is downward supply level, yeah. So now on weekly time frame, this is how things look for the EURUJPY. And by the way, once again, kudos to you guys that took this sell trade. That was really, really brave of you guys. So the next thing now for Euro JPY is very, very simple. Now we are currently coming back to sit on a solid demand level that sent the market going through the roof at this point here. And you guys know that past price action kind of like predicts, what the future price action will look like. So in that note here, on that note, we have what this looks like here, which happens to be this is a low, this is a high, low, high, equal lows right here. All right. So in this case here, two things could happen. It's either we come in to put in an inverse head and shoulders pattern, or we just balance out properly here for us to continue higher. In this case, I'm favoring the bullish side. Why? Because overall we've been very, very, very strong on a bullish trend. So I see no reason as to why the market should suddenly just reverse from here. However, like I said, anything is possible with this market. I don't control it, you don't control it. Anything is possible at the end of the day. So we should be watchful, but I'm very, 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 very keen on my bullish stand. In fact, as things look, this happens to be a nice Fibonacci play from swing low to swing high right here. So I see no reason as to why Euro JPY should not rally higher into this yellow bar right here. However, as things stand here, this will be the deciding point, because if this bar gets broken here, we have all the way to the downside. It will now expose us to another a different trend entirely. All right. So the next pair on my list now is GBP JPY, as we do to round up. So GBP JPY, on the other hand, has also given us a very decent print. Very, 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 very decent print, guys. Now, as things stand once again, these pairs are extremely bullish. I see no reason as to why you should be looking to short this pair. However, if you took the short trade I called in here, you're good to go. However, from the way things stand here, I hope that you're starting to lock out your trades. Yeah. So from the daily time frame, obviously from the weekly time frame, we have space to the upside here. So this is a nice 50 Fibonacci play. We have from swing low to swing high here. This is the demand level that the market is currently playing around. So we need to see this guy pulling deeper into this trend line here and balance out properly, which is the reason as to why I'm calling the pound sterling to the downside, medium term, to retest that demand level for us to actually go higher. Same thing is happening here. The market has to come back and test this GBP JPY demand level properly before I actually start looking to buy this guy all the way up to the upside. All right, to this blue bar. So as things look on the daily time frame here, we have this supply level in action here. So I called out this pair right around here. I said that you guys should be looking to short this guy around here. So this pair still has some more downside in itself. Once it comes down to this yellow bar and this trend line here, look for a nice decent 4-hour or daily candle bullish engulfing. It has to be an engulfing candle, guys. Believe me, an engulfing candle is very, very good to go. All right, so that would be a very decent entry criteria. And by the way, anything could happen because this market is extremely dynamic. So I always be here. Thank goodness you have actually subscribed to the channel and then gone ahead to turn on the bell notification, so you won't be missing any future updates from me. So the next panel on my list would be crude oil. Crude oil has been one hell of a trade so far. We have been boiling crude oil for a very long time. However, I noticed something from our weekly Forex Forecast, which is why, once again, I want you guys to always go back and look, because now I went back there and I saw something which I'm sure that most of you guys have not seen. So once again, always go back and watch these videos for your own good. For your own good. This is how you learn. You get mastery via repetition. All right, you get mastery via repetition. So as you can see, I was banking on this guy putting in deeper into this level, right around $74 per barrel for oil. That was my prime target as per pullback for me to short this down. Only for me to come on the higher time from the weekly time frame to look at things clearly. And then I can now see that, that the market actually came on here, first touch, second touch. And when I extended this, I see why the market just reversed from here. See? So those of you guys who are actually very, 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 very finger happy, if that's the word, trigger happy rather, you guys love to play trade all the time. You have to be careful. You have to look at things from a broader time frame. And whenever you see you're on a time frame and you don't seem to understand what's happening, you have every right to pull out, all right? Zoom out and go on higher time frame. Sorry guys, I use the word pull out, but yeah, pull out of that time frame and go higher. Okay, go to a higher time frame. Say for instance that you're on the daily, go on the weekly, but if we go on the monthly, you can explore all time frames so you learn how these things look across different time frames. You know what's driving what decision. All right. So now, as things stand here, we have actually come on it to test this trend line here. So I see no reason as to why this guy should actually go higher. Instead, we would even continue to dip on crude oil, provided that this level stays intact. Now, if for some reason we happen to blow above this yellow bar here, we have space all the way to this blue bar right here. However, I'm favoring this guy to the downside to the tune of 70%. All right, so I always like to leave that 30% for the what ifs. So now, as things stand here, we're just flirting around this whole level here. So once this dips below, actually, let's see if we can make money off of this. For those of you guys who missed the trade, I'm not really a big fan of trading mid-range. I like to catch the entire move from the onset. I'm not really a big fan of this kind of trades. So, however, you could maybe look for a pullback into this supply level right here again, and then go short on this pair. My private target remains this blue bar right here. Obviously, take out your profits once you get to this recent low. All right. So the next pair now on my list here would be the last pair now is the dollar index, which is like the reason behind this whole market shenanigans here. All right. So the XY on the weekly time frame looks like this. This is what the XY looks like on the weekly time frame, right? It looks pretty nasty, pretty indecisive, just floating around this range right here. So and I know exactly what's happening. So this is how things look here. We've been rallying for years, for like 2-3 years. We've been on a very steep upward trajectory, and the market is just kind of like catches breath and also decide if it wants to go higher or even dip lower. All right. So now, from my recent videos, you must have seen something like this, which is like my prime target for the XY if this blue bar is broken. And yes, I'm still adamant on that. I'm still very persistent on that. In fact, I'm actually anticipating a pullback on the dollar index here. So should we see a pullback on the DXY, a revenge, or maybe a bounce back, or some form of hope or life on this pair here, all the way to 104 start 103 region here, you should actually look to short this guy. And then, mind you, the US election is about 30 something days away, so you might want to be careful as you trade into these times. All right, so because the market tends to be really volatile around this period. All right, so as you can see here, we are actually on a pullback spree rather. So this is what it looks like here, and this is where the market has had issues breaking below. All right. Now, this is how things look. So we could even see the market pull back into this yellow bar right here to just revalidate that supply that was created earlier on, and then now decide, are we going to go higher or drop lower? But I'm favoring the XY to the downside to the tune of 70% and the upside to the tune of 30%. That's if and only if this yellow bar holds. In the event that we do actually break above this yellow bar here, then that particular trade call is invalidated. All right. So thank you so much, guys, for sticking to the end. Once again, my name remains Desmond Samuel, and I hope to see you guys in my next episode. Now, go ahead and leave a comment and subscribe, and then also turn on the bell icon for future updates. Thank you so much, guys, and see you guys in the next episode. Peace out.